Hello everybody, my name is Christian Charlo. Welcome to that market report. Today we're Thursday, September 26th. Today folks, I want to make a follow-up on the last market report concerning the FOMC announcement, where we had a surprise and a lot of gold and silver stock surge. While in most of the signals I've shown you, a lot of them were false technical signals, but I told you to put your stop loss on those signals. So if you actually got rid of those stocks, good move, because right now we're reaching an important support again on those gold stocks and we're waiting for the new movement. If you have not done so on those gold and silver stocks I've shown you, well then we still have to wait because we're waiting for the new direction. So far, where are we? On gold, the movement I talked to you about when we made the last market chronicle was on September 18. Right now, we again in an in-between situation. So if ever gold breaks that 126.11 support, definitely that's the point where you should consider invest in GLL, a bearish ETF, or HGD. But so far, those of you who on September 18 opened some positions on bullish ETF like HGU or UGLD, I think you still have to hold on to them because we still have not been able to break that support on gold. If we break it, those bullish ETF like HGU or UGLD, you have to get rid of them. And when should you take some profit? You should take some profit whenever GLD reaches 131.57. So that's going to be a short-term trade, but this is your target, 131.57. And where you should get out on those bullish ETF is whenever gold breaks 126.11, which is that important support. Now, what about the gold stocks? Well, when we talked about the gold sector, you saw that the gold sector is still staying in an in-between situation. For the gold stocks I've talked to you about, there was Barrick Gold. Barrick Gold so far didn't reverse its upward trend. So those of you who got in, I told you it was not a great stock because I didn't really like the potential on that stock. Well, those of you who still have it, I would say it's a hold because Barrick Gold resisted as compared to a stock like Yamana Gold, which actually broke that support. So you had to get rid of, on September 24th, you had to get rid of your long exposure in Yamana Gold. If you didn't do so, now you should wait because right now on a lot of gold stocks, the stochastics is starting to show that we're starting to tilt towards the overbought situation. So that might be a bottom though because we're retesting again a support on those gold stocks. So if you actually still have some positions in Yamana Gold, I would say hold on to them and your target to take some profit will be at 11.58 on Yamana Gold. Also, Gold Corp. Well, the breakout was around here. That was actually a stock that we think that had more potential on the upside, but finally the stock broke down. So at September 20, you had to get rid of your long exposure on IAM Gold. But right now we are making a new support. And if you actually still have some positions on IAM Gold, I'll tell you that the target is whenever IAM Gold can reach 584. Right now we have the stochastics that is starting to tilt towards the overbought situation. So we're starting to be totally we're starting to leave the oversold situation. So that shows you that there's some buyers who are getting in on gold stocks because with the debt crisis that's coming on, with no solution coming ahead, with no positive outcome that seems to come ahead because Republicans and Democrats are sticking to their own arguments, not willing necessarily to compromise. So that might bring some investors into those gold stocks. So that's why I'm telling you, if you still have those positions, you have not got rid of them when those stocks broke their support after the upward movement on September 18, hold on to them. But you should get out of those positions if ever they break that important support. So on IAM Gold, your last chance to get out is at 489, and on a stock like, for instance, Silver Weapon, which was also among the stock that we told you to acquire on September 18, your last chance is whenever, if ever, Silver Weapon breaks again, 24.55. There was also Pan American Silver. We didn't really like that stock because the stock didn't show much potential on the upside. We didn't like the reward that it was giving in terms of potential until at 1437. So we told you that on Pan American Silver you had to put your stop loss. If you didn't do so, right now look at Pan American Silver. It might just do the same technical rebound that it did in June. So right now we are waiting to see what's going to happen. Are we going to finally have that? Because every time we reach that movement, look, we had a rebound. We had a rebound, and that might be the moment that might happen too in Pan American silver. So I'm telling you, be patient, but you have to wait for confirmation of the stochastics heading up towards the overbought situation on increasing volume to confirm that you can get in on Pan American silver. Silver went on New York. And for the mining sector, there's Tech Resources that's still a hold. So far, the stock has not been able to reverse its upward trend. So what's the strategy in general? Well, we expect to have heightened volatility on the market, especially when we take a look at the SPY though. Look at that. The SPY is testing an important support. So if the SPY breaks that 168.85 support, it's all bearish. So I would tell you that if you'd like to benefit from that volatility, there are two ETF that tracks volatility that will allow you to do so. HVU, I would say you could get in right now on HVU and put your stop loss, let's say at 310. If ever we break that support on the SPY, well, HVU will rise and your potential is around 358 on the top of that sideways formation. So a possibility to reach 358 as a gain and a possibility to lose until 310. So the risk reward is actually good on HVU. There's also the VIX. Actually, your stop loss should be at 1335 and your gain potential is until 1431, which is 1411, sorry, which 1425, which is the top of this sideways formation on VIX. So those ETF, VIX, HVU, and TSX are actually ETF you could acquire to actually bet that we're going to have heightened volatility, especially because there seems to be no positive outcome concerning the debt increase of the debt limit in the U.S. because Republicans and Democrats are sticking to their own arguments, unwilling to compromise. And this will come on Tuesday, which is the deadline when they'll have to reach a deal. So we don't know what's going to happen, but if you're getting in on those ETF, just put your stop loss on the VIX. The stop loss should be at 1331, and on HVU it should be around 310. So this is it, folks. See you next week for your market report. And if you still have gold stocks, you have not got rid of them, watch them. But if ever they break again their support that they're testing right now, you should get rid of them. You can get access to all those breakouts and all those strategies and many more live on a daily basis on marketgurus.tv that you can have access for free for 10 days just by clicking at the link below. So this was Christian Charlo from Decision Plus, and see you next week for your market report.